Well, for anyone hoping we'd seen peak inflation in the US, well, you've been left wondering. Equity markets, well, the trend is firmly your friend. There's been carnage in the crypto markets, and Blake and I look at gold and what currency pairs are coming up on our radar as we go into the trade-off. Hi, my name is Chris Weston, Head of Research here at Pepperstone. In a couple of seconds, I'm going to be joined by Blake Morrow from Forex Analytics, and we're going to be dissecting and navigating all the crazy world of financial markets and some of the big thematics and setups that have come onto our radar. And remember, if you find yourself liking the program, smash the like button. We'd really appreciate that. And of course, if there's anything that you hear throughout today's show, we really want you to be part of the community. We want to hear your comments. So please get involved in the program where you can. So without further ado, let's bring the great man into the show. Blake, I want to start by saying, last week we called it pretty badly. I think, certainly the Aussie dollar was one that came firmly on our radar. Risk has come out of the market once again. We've just seen a really much hotter than expected CPI number, which again has caused risk to come out of the market. In fact, every rally that we see is, people are selling into. So our Aussie calls were pretty poor last week, weren't they?
They really were. And when you said great, man, I about chuckled because, I remember vividly, we celebrated Mother's Day on Sunday evening, and Monday morning in Australia, which is my Sunday evening, I got stopped out of my short Euro Aussie as I was eating my burger at a restaurant. So it hasn't been my best of moments this week as far as my trading goes, but it does happen though, and it happens to everybody.
It does, mate. It does. And I don't know, maybe there's a chance to sort of reclaim and have a look at the Aussie throughout this show, but there's obviously a lot going on in this crazy world of markets. So I think it's probably a good idea just to sort of touch base on all the things that are coming across our radar. So let's go into topical thunder. Well, the first one, Blake, we talk about this idea of sentiment, but sentiment drives equities, it drives markets more broadly. And I think sentiment's pretty bad. I think personally, my view is that we're going to get a slow grind now, maybe sort of 1.5%, 1% lower in equity markets. That will keep volatility somewhat suppressed. The VIX above 30%. The dollar still looks like one of the best places to be, although I'm looking somewhat more favorably at the Japanese yen. We're starting to see some two-way price action coming through in the treasury markets again. But, if I look at the equity markets, Blake, every time I see a rally coming through or an up day in the market, we see higher volume. And that tells me funds are just deleveraging and using that strength to sell. It's a seller's rally. We sell in rallies at the moment. So I think sentiment seems to be pretty shot at the moment. How are you reading it?
Sentiment is really shot at the moment. And I think a lot of that is, there's so many different things, so many facets of it. But Chris, we're going to talk about cryptos, but really, the crypto market, as we've highlighted here so many times over the last however many 6 months that we've been doing this show together, crypto is really a big sentiment indicator, and it is in the toilet at the moment. That you've got inflation that doesn't look like it's going to subside. Everybody's looking for peak inflation. How about leveling high inflation? That's what it seems like in the US. You've got equity markets that, there's a line in the sand that I'm looking for just from a technical level. It's like 4,100 on the S&P. It means if we're below that, you got to stay bearish. Sentiment's going to be bad. And sentiment is one of those things, Chris, from a market standpoint, it's something that the Fed tries desperately to control because they know when sentiment turns, it turns viciously. And it's hard. It's kind of like the inflation genie bottle that you always hear about. The sentiment genie bottle is the very same genie. It's just in a different form. And when it comes out of the bottle and it changes, it's hard to stick that bearish sentiment or that negative sentiment back in the bottle. And the Fed has to do everything to try to stop that.
Let me say this. I think let's keep things real simple, right? You talk about the Fed, wanting to control sentiment. Well, right now, the Fed wants sentiment to deteriorate. Not so badly, but they want lower equity prices. The Fed do not have yours and mine and the public's back. They want lower equity prices. They want the dollar to go higher. They want real rates to go higher. They want credit spreads to widen. They need financial conditions to tighten because they want the credibility, and that credibility that has been shot to pieces is about they don't want to be after 40 years of winning the inflation war. They don't want to be known as the central banker. Certainly, Powell doesn't want to be known as the central banker who has lost this battle against price pressures. And they want to do everything to do that. So, for me, keep it simple. What is simple? Don't fight the Fed. What does don't fight the Fed look? It means lower equity prices. It means lower.
Yeah, I mean, hey, the Fed's raising rates. They're on cruise control. They're on cruise control, Chris.
Yeah, absolutely.
All right.
Absolutely.
Well, let's turn it over to the euro. And, the euro has been a bit of a head scratcher recently.
Yeah.
And I got a message from a buddy of mine who was like, hey, look, and this is a guy that I traded with for several years. And he's like, I don't know what's holding the euro at 105, but it's held there, and it's held there really strong. And you don't know if it's like a sovereign buyer. You don't know if, who's doing what, but I'm looking at the euro and I'm trying to figure out, why is it up here at this point? And I guess the question is, do you think it's going to break below 105? Do you think the dollar is about ready to let loose on another tirade in the markets? I mean, I look at the sentiment deteriorating, as you discussed, and I try to look around at the currency market and try to figure out, where are we going to want to park? Where's everybody going to want to park their money? And right now, it seems to be the dollar, and the dollar is the least dirty shirt in the drawer or in the hamper, however you want to look at it. But the euro is just perched above 105. Do you think we have an epic break at that level, Chris? Do you think that level is about ready to give way, like maybe by the time people are watching this?
Yeah, I mean, I think what you've seen is a slight change from the ECB, haven't you? I mean, they've made it pretty clear with Lagarde and some of the other members there that they're going to raise rates in July. They're going to close out their asset purchase program in June, which will give them scope then to raise probably by 25 basis points in that July meeting. And the euro's found some solace in that, some short covering coming through, mainly against the pound, because the pound's been the weakest link over the last few days, and we can talk about that a little bit later on. But the yen's starting to look a bit cheeky at the moment, Blake. We're starting to see some somewhat better qualities in the yen, maybe as a safe, but reverting back to that safe haven play. Some unwind of the carry trade, which has worked so well for a lot of these trend following funds. They've been long, dollar yen and all these other places picking up carry as well as the capital gain. And I think if vol continues the way, then some of these positions come off. But I think I like euro dollar lower. Break-even rates have been high in Europe, which was allowed euro appreciation. But I think you need to look at relative real rates. I think against the dollar, you'd be looking at levels to sell into. And I think once 105 goes, then that's the case. But if you want to be long the euro at the moment, it's against the pound, isn't it?
Yeah, it sure is. And I also want to say regarding a risk aversion, or in a period when sentiment's pretty sour, whenever you see a bearish market that we're in, and you see us breaking a lot of key levels, a lot of times risk aversion comes in like a relay race. You'll see the dollar strengthen for a day or two, then it passes off to the yen, then over to gold. Yeah. And you'll see people just looking for different safe havens, but it's a lot like a relay race. So when you say that the yen's looking a little cheeky, that makes a little sense to me, Chris, and I've seen it. So,
yeah, Blake, let's go back to our good friend, the crypto landscape. Obviously, UST has been the big one there. Terra has been the big issue, where we saw the peg effectively breaking. They run an algorithmic situation there, and that's been hugely volatile as that peg's broken. Luna, the coin, the token has been absolutely hammered. Now, I think I'm not an expert in this field, and I'm not sure if you are, but correct me if I'm wrong. There's a lot of questions that this throws up. The first one that we've been fielding is does this have ramifications for some of the bigger ones like Tether, for example, like USDC. I know that Tether is very deeply entwined with the financial system. It has about $30 billion worth of commercial papers. It's one of the biggest holders, I think top 5 holders of commercial paper. So is it too big to fail? We know that Janet Yellen, the US Treasury Secretary, has said that Tether and USDC and stable coins do pose a threat to the US and global financial system. So is there a systemic issue, or is this what's happening with UST? Is that just an idiosyncratic situation? The second question then comes into the idea of, not just stable coins that have been getting hammered, but actual, these tokens, these coins. I know that they use Luna in their protocol, but you've seen massive volatility there. So what's your thoughts?
Well, first of all, the good news is, Chris, is I don't see it being, well, as far as today goes, you see it being idiosyncratic, and it's not bleeding into different markets. And I mean, I'm not an expert either in what's happening with Luna and Terra, but I, the reading that I've done, I was like, wow, that sounds like a Ponzi scheme to me. Like what's it backed by? It's not backed by anything. It's backed by this value, and this value is backed by something else that's not backed by anything either. So you got two coins backed by each other that, if you lose, if you lose faith in one, then it's obviously it's gonna crash, and that's what happened. But it didn't make its way over. But I going to your second question, I have to say that the currency market is getting slammed, and that is one thing that I think we should be paying attention to, because again, it's that risk barometer, it's that sentiment indicator that a lot of people are looking for. But I've also had the question posed to me, did we see some sort of capitulation? And my answer is we haven't. And I think there's lower levels to go in crypto.
In crypto, yeah.
Yeah, in crypto, generally speaking. But it's been a wild move. And I feel for a lot of people that have been holding some of these coins.
Yeah, no, absolutely. I mean, but at the end of the day, I mean, but yeah, what's your time horizon? But if you're down from 65 grand, then you've got to manage that risk. You've got to admit you're wrong and go to cash and take that position off. You just got to know when you're wrong and not put your head in the sand. But yeah, I think this is going to be an idiosyncratic situation. We are watching Tether, and we are watching for black swans that come out of it. If the US Treasury are concerned, it's definitely something that should be on our radar as well. But for me, crypto is a momentum vehicle. I've said it time and time again. Buy it when it's going up, short it when it's going down, and keep it simple, because that's what it does. And it does it better than most instruments out there.
Well, speaking of, I think that's a perfect segue to the next topic, Chris. I want to talk a little bit about volatility. I mean, volatility has been on the rise, and the VIX that everybody tends to follow is what, at a 30 handle, something like that.
Yeah.
Volatility's up. The moves are getting bigger, and this is a perfect time to take a step back and have a public safety announcement for all of my fellow traders at home, in their home offices, managing books, however you're managing through the markets. This is the time where volatility is picking up. Things are getting kind of wide. Take down your position size, make it smaller, widen out your stops a little bit so you can be cushioned by some of that volatility and be able to ride out some of these trends, because there is a lot of volatility, and these are the times where people get hurt. And I'm going to tell you what, Chris, your business at Pepperstone and what I do at Forex Analytics, our survival is based off survival of traders that are around us in our communities. And, we want you to thrive when there's time to thrive, but we also want you to be careful when you can get hurt. And these are one of those times where you can get hurt. So I just wanted to throw that out there as more of a public safety announcement for all of our fellow traders around the globe. What are your thoughts?
Well, I think volatility is absolutely key for everything we do. I mean, when volatility is high across asset class in all the major ones, then yeah, of course. I mean, when you look at the range expansion, we can look at the ATRs. There's a whole raft of what things you can use, Bollinger Bands, standard deviation, all these kind of factors. Yeah, I mean, absolutely. I mean, you need to trade with a wider stop, because your propensity to get stopped out because of the ranges are higher. So if you're taking your stop loss out, you've got to have a lower position size to accommodate for the risk you're taking on. So position size is key. What you don't want to be doing in this market is find something that's in a rip-roaring uptrend. The volatility is high, and you don't take your position size down and you sell into that and you try and trade against the trend. That's why people get carted out in this market. That's why people dust their accounts. So you're going to have a look at what's working really well right now. It's trend following funds. They had their best March, I think, on record. They had the best, one of the best Aprils on record. Trend following systematic funds, which are going along for the trend, whether it's in treasuries, whether it's in currency markets, think yen, think dollars. They're killing it at the moment, Blake. So the trick is, especially when you're trading on leverage, you're trying to fight the trend, you need to be pinpoint accurate with your entry. Investors don't get that, but you need to be pinpoint, especially when you're trading on high leverage. Position size is really key there.
It is key. And I mean, I even saw traders today in our community. They're like, they didn't know what was happening with Luna, and they're like, oh wow, it's bounced from 3 to 6, and I know they were trying to pick bottoms, and I'm like, Yeah, but it's at 1 right now. So,
Yeah,
you know, you guys got to be careful. You guys and gals got to be careful. This is the
that's right.
time where you need to adhere to sound risk management. And as Chris pointed out, be really careful where your executions are. And if it's all right to be wrong, it's not okay to stay wrong.
Correct. Exactly right. But yeah, do respect volatility. Movement in the market needs to be adhered to. When you've got a vol regime like this, position size absolutely matters if you are to survive and thrive. Anyway, let's go into some of the charts that are catching our eyes. Let's go to that
Sounds
setup.
great.
Right, I'm going to bring up the big one, the one that everyone's talking about, Blake, and that is Bitcoin now. We've seen pricing trade through that horizontal support levels. We're actually sort of just shy of it now. By the time I gave the chart to my producer, we're just shy of that one at the moment. As I speak at this very moment from Chateau Weston, we're currently 29,592. So we're just below those levels now. If you have a look at the technicals on this one right here, right now, there's actually a bit of an air pocket that comes down to you pick a number, 20,000 or so. We've got this bear flag that's now been broken, which you can see that technically, I'm not calling it, but technically the target on that is around 10,000 or so. So yeah, I mean, if we get through this last bastion of support, then it's going to be ugly. I mean, you definitely trade it, in my opinion, from the short side. Now, we might see in the next 24 hours a short covering rally, and scalpers are going to be all over this one right now. But the setup, that at least from the daily chart, is looking very, very precarious indeed. Now, I know we've been bullish over the past, but I mean, this setup now, if it breaks through this horizontal lows, then it's a bit of an air pocket that goes further lower. So I'd definitely be trading that from the short side if it breaks and can close through those lows. What do you think?
Well, I'll tell you, I've been very constructive Bitcoin while we were in that channel, and once we broke down through what you see as the bear flag, you're right. Lower levels, it seems like that is where we're going. Once that broke, all hell broke loose, and that really happened over the last week. And I have to say this, that many people are targeting that breakout point at 20,000. My opinion is we're going to go way past that, where your bear flag might actually come into play, or we're going to stop short of it because so many people are going to have bids there that, it's going to stop ahead of 20K and probably hit 22K. I'm not willing to make that call right now, but I will tell you what, if we start getting below 28,000, 22,000 is not very far away. And that seems almost logical.
I want to say one of the big variables, like you've got to look at Michael Saylor as well, MicroStrategy. MicroStrategy is getting absolutely carted out. Coinbase. Yeah, these kind of companies are getting smashed at the moment. Shorting them is another way of alternative of doing this. But yeah, Michael Saylor, I think his average fill was around 21,000 for Bitcoin, one of the biggest holders out there. So yeah, what he does in terms of margin calls and various factors could be a really interesting dynamic there as well.
We sure could. That could be that catalyst that drives us below 20K. So, but let's try not to be too bearish right now. I'm going to take us over to the Aussie, your homeland, where you reside. And I've been talking about this trade for a long time, and I revisited it. I want to say 2 or 3 episodes ago, Chris. So 2-3 weeks ago, and I was like, "Yeah, we're just stopping shy of 70 cents. I'm not sure if it's going to get down there. It seems like we're trying to create a higher low, and then boom, it goes to the 200-day moving average, and then all the way back down." Now, here's the thing: I have been planning to buy the Aussie dollar at these levels since last year. It's something that's been on my radar. I've talked about it multiple times, not only on this show, but on other venues as well. And we are getting towards that 69, 68 cent level where I am finding it attractive. Now, I am obviously, very aware of our environment right now. And it's hard to, get into a trade that's just going to make you puke, but sometimes those are the best trades eventually. Yeah. But at this point, the Aussie dollar looks like it will see 69 cents, if not 68 cents. And that is a place where I'm willing to stick my foot out. And that's something I've been wanting to do. And, you plan a trade, and I'm trading my plan. That's what I'm looking for. Chris, what are your thoughts?
I just want to know, I get the technicals, and, I don't disagree with that, to be honest. I think, coming into that lower trend line seems to be the case. What I don't get, this idea that, you had an idea last year to do it. When the facts change, we change. Surely the facts have changed so much that idea that you had last year still no longer stands fundamentally, tactically, technically. So if you wanted to do it last year as the trade of the decade, or how can that be? How can that still be the case if so much water has gone under a murky bridge?
So, that's a great question. And here's going to be my rebuttal. I tried to see if it will fit into a master plan on what's happening in this current environment. And the fact of the matter is we are getting oversold on some indices. We might get a bounce. We might get a bounce from these levels. And I think inflation is not going away. And I think inflation-linked currencies like the Canadian dollar, the Australian dollar, the Kiwi dollar, all those commodity currencies are going to perform better than the dollar in years ahead. So I'm thinking that, yeah, we might get a bounce here, and I'm willing to start looking around and sticking some orders out. So.
Yeah, good stuff. No, I mean, I don't disagree. I'm just interested. I mean, I open mind to everyone's process, and I'm not going to poo-poo that. But 5 months is a long time in the markets, right? So
it is. It really is. Yeah.
Yeah. Okay. Well, let's go to the US 500, because this is an interesting one as well. I mean, we've got a wave of quality coming through. We've kind of hit that point, right? But you've also got this kind of head and shoulders pattern. If you were to take the chart out a little bit, which we can't do here because it's a static picture, but you'd be able to see that head and shoulders. We got to the highs. It's obviously a reversal pattern playing through. Doesn't necessarily give that impression, but we've traded through the neckline, as you can see there. So it's kind of make or break time. I will say that everyone is saying this market is oversold. Like you can look in market internals. I'll give you some statistics, Blake. I'll use the NASDAQ, for example, so I've got it right in front of me now. We've got 15% of stocks above their 200-day moving average. I mean, it's down at the lows we saw back in 2020. We've got 38% of stocks making 4-week lows at the moment. We've got 6% of stocks above their 20-day moving average. I can go through all these market internals. The market is crazy oversold at the moment. But just in a bear market like this, I think what's oversold doesn't really matter. It just doesn't got that same situation. And as I said in the beginning, every rally that we see in this market is being sold into. The volume on those up days is significantly higher than the down days. And that tells me that people are selling rallies. So to me, it's a slow grind lower. I like the market lower. I could be wrong. Obviously, I'm often wrong. But I think for me, with all this flow and deleveraging that's taking place, I think equities go lower. What do you think on that chart?
I think you're right. And as long as we stay below 4,100, like I said earlier, I don't think there's any reason to be on the long side. Are we oversold? Yeah, but we could be more oversold at any given point, and bounces are probably going to be shallow. And I agree with you. We're probably going to continue to grind lower until the Fed blinks. And if you think that the Fed is not on cruise control right now to raise rates another half a basis point, then another half a basis point, I think you're crazy. Yeah. But is there a point where the Fed will blink? Yeah. Is it right now? Not as far as I can see.
Inflation is all about inflation at the moment. And do you know what we heard from Bostic last night after the inflation number is that 75 basis points, while not base case, could be back on the table. And I think that's the issue. One thing that could really accelerate the move to the downside, and we talked about last week, is crude. Crude is on a rip-roaring tear over the last 24 hours. And if crude continues to push higher, it's going to be a negative for the markets because people talk about headline inflation. So put crude on your radar, put nat gas on the radar. If they continue seeing that sort of flow, then I think equity markets will not like that, because anything that says inflation is going to be staunchly ingrained just give the Fed more scope to go harder at this market.
I'm pretty sure we said that last week, Chris, when I said, hey, where's that breaking point in crude? And we're getting towards that. It's going to be like higher prices is not good for anything.
100%.
Yeah. So and glad you brought that up. But I'm gonna shift gears a little bit more to the euro sterling, because, and I know this is I like to use Chris's commentary here. It's a cheeky little headline, Brexit 2.0. Yeah. But let's not ignore the fact that the sterling is extremely weak right now. And one of the reasons why the sterling is weak is because there are threats between the UK and the European Union right now regarding Northern Ireland. And I'm going to read something from the Associated Press from about 12, 13, 15 hours ago. It says Foreign Secretary Liz Truss said the government would not shy away from taking action if it can't reach an agreement with the bloc, the Euro bloc. The EU warned that renegotiating the legally binding agreement is not an option, and any move by Britain to unilaterally rewrite the rules would bring legal action from the bloc that could escalate into a trade war. This is all regarding Ireland, the borders, and being able to form a new government in Northern Ireland. And I'll tell you what, it's not something that everybody's thinking about, but it should be. And I tell you, the sterling looks like it is paying attention as the euro pound is nudged up against that 86 pence level. And I'll tell you, that's 127% extension. It's wedging right into that number. And, you know, a lot of people are looking at the sterling thinking, yeah, it's weak. It should bounce because it's oversold. But that thing could see 120 in a heartbeat. And if the euro continues to hold on to 105, the sterling goes to 120, that euro sterling is going to be at 88 pence before you can blink. What are your thoughts here, Chris?
Yeah, it's interesting, isn't it? I mean, this idea. I mean, it's a complicated issue for a lot of people, especially Americans who aren't as well read, I guess.
Wait, what? I'm standing right here. Right
I'm
here.
just joking. No, I mean, look, obviously I mean, this is coming off the back of the Bank of England last week saying that there was stagflationary sort of concerns coming through, and I think the markets have repriced. I mean, there's a bit being priced into the rates market. They've been priced out. Just looking now, we've got basically 107 basis points of hikes being priced over the next 12 months by the end of the year, effectively. So there's another 4 rate hikes. But this this Northern Ireland protocol is it's despised by a lot of people. The EU need it in there, and if the UK go against it, that could certainly see geopolitical issues between the UK ramp up, and that's certainly something that I don't think is necessarily priced into the pound. So I think this is part of the reason why no one's buying the pound, and of course order books dynamics play through. So you've got interest rate hikes that can still come out. You've got stagflationary environment that's being admitted by the Bank of England, and you've got geopolitical issues playing through there. So I think all signs for me suggest selling the pound, and I'd like to do that against the Japanese yen at the moment, Blake.
All right.
Cool. And with that, let's go to play of the day, because I think that's probably where we're going to go.
That's it.
Well, I think you just saw on the picture there that Pepperstone is now a major partner with the ATP Tour. So Blake, next time I'm coming over to America, I'll get you some tickets and we'll go over to wherever the ATP Tour happens to take place. Hopefully there's one in Nevada somewhere. Get a cheeky gig to Vegas. But it's really exciting times for us. Getting in bed with the ATP is obviously a big business and a major brand, and very exciting times for us there. So great to see. Anyway, let's go to my trade of the day. I'm going to wear a pound against the Japanese yen for all of those reasons that I just mentioned there, but also, when you actually come out with this sort of fundamental view, when you are trading currencies and any kind of situation, you want the flow of capital to be on your side as well. I don't like to trade against the trend. I know it's a cliche, but you're going up against reserve managers, you're going up against real money, pension funds, life funds, you're going against hedge funds who are all doing one time. The currency market is a hodgepodge, a melting pot of flow, and effectively you want to align with that flow of capital. So my view on that is that the pound's got downside. If we have a look at the daily chart of sterling against the Japanese yen, we know what's happening in Japan. We know the Bank of Japan are arguably the most dovish there, but what they've done is towed a consistent line. In the UK, you've priced a lot of rates. Some of those rates are coming out of the pound. Now, if we have a look at that horizontal red line, if we break through that, I think it's just going to accelerate to the downside. And I think you've got that blue box coming around to 157.50, around those kind of region there as well. So, I think fundamentally, I love this one to the downside. And right now, the flow of capital is telling me that the market is warming to that view as well. So when you get those two together, Blake, you get yourself a trade.
I like it too. And just between you, me, and everybody else listening, I actually have an order to short that already in the market, and I had it out since way earlier this session. So glad you pointed that out. So let's take a look at gold, and I want to talk about my play of the day. Gold has reached the Gartley gold. Gold's Gartley, the Gartley. It's a bullish pattern. And it's a pattern that comes into a lot of confluence. And I'll tell you, I love it when I get multiple levels of confluence. And then you throw in a hot inflation print that we got today. And you know what? Gold could rally. And gold will be an inflation hedge again at some point. It's always been known as one since I started trading, and it's going to be known as one again. But this is a Gartley pattern. This is a bullish Gartley, and notice how we respected the 200-day moving average to a T yesterday. Also, multiple trend lines came in from that top of that triangle, the bottom of that triangle. They all intersect right at the 200-day. And I'm going to tell you this right now: hey, as long as we trade above 1810, then I think we get a bounce probably back to 1950. We get below 1810, 1800. Yeah, I don't know if you're going to want to be long anymore. And that's good risk reward from where we stand.
Yeah, I think there'll be a lot of clients who are very happy with your call there, to be honest, because I think there's always a structurally bullish argument to be made there for gold. But I think the fact that we saw real rates down 15 basis points and twos last night tells you that the market sees the Fed as significantly behind the curve. And that's why gold had a bit of a rally on the back of that. Anyway, exciting times ahead. Blake and I have dissected a lot of what's going on in crypto. We want to hear from you about what you think about what's going on in crypto right here, right now, because I know there's lots of people who are very entwined with that market, and really understand a lot about what's going on in that field. So really keen to hear what you have to say there. We also want to hear about what you have to say about currency markets, some of the views that Blake's call on gold, for example. And yeah, thanks for everyone who's watched the show tonight. If you've liked the show, smash that like button. Really appreciate that one as well. Anyway, we'll see you next week.